I started building my SCHD position gradually, dollar cost averaging over several months. SCHD is the Schwab U.S. Dividend Equity ETF. It's built around high quality companies with a strong history of paying and growing dividends. My total investment, $9,358. That's not some huge sum that's going to impress anyone on social media. It's about $27 per share, spread across 341 shares, real money, but not life-changing money. And you know what? Right now, my position is worth $9,268. That's a paper loss of about $90, $90, less than what I used to lose on a single stock pick on a good day. But here's the thing that would have driven the old me absolutely crazy. I'm not worried about it, not even a little bit. Why? Because while I'm down $90 on paper, something else has been happening in the background, something that completely changed how I think about investing. My dividend journey didn't start with fireworks. It started small, like single digit small. Back in September, I got my first SCHD dividend payment, $9.10. That's it, $9.10. Doesn't sound like much, right? But I didn't clock in for it. I didn't trade my time or energy for it. That money showed up just because I owned shares of real cash-generating companies. That tiny deposit hit different. It was the first time I saw my money work for me instead of the other way around. December came around, and my dividend jumped to $37.80. The payment was bigger because I had accumulated more shares, but also because SCHD had raised their dividend. That's when it clicked. This wasn't just about the money I was putting in. The companies in this ETF were growing their dividends, which meant my future payments would keep growing too. By March, my dividend hit $64.40. I was starting to see the snowball effect. Each payment was getting reinvested, buying more shares, which meant bigger future payments. It's like compound interest, but instead of waiting decades to see the results, you're getting paid every quarter. Then June happened. $87.99. Almost $90 just for owning shares of an ETF. I didn't have to analyze earnings reports, didn't have to worry about FDA approvals or cryptocurrency crashes or whatever drama was happening in the markets. I just owned pieces of profitable businesses, and they sent me money. Looking at the trajectory, I'm on track to receive about $350 in annual dividends. Now, I know what you're thinking. $350 isn't retirement money. You're absolutely right. But here's what changed my perspective, that $350 is growing every year without me having to do anything. The companies in SCHD are constantly working to increase their profits, and when they do, they share those profits with shareholders like me. This is where dividend investing messed with my head in the best possible way. When you're picking individual stocks, you're constantly checking prices, reading news, second-guessing yourself. Every day is an emotional roller coaster. But with SCHD, something weird happened. Those quarterly dividend payments started training my brain to think long-term. Instead of obsessing over daily price movements, I started focusing on the businesses themselves. Are they profitable? Are they growing their dividends? Are they the kind of companies that will still be around in 20 years? The answer for most of the companies in SCHD is yes. We're talking about Verizon, Coca-Cola, Cisco, companies that have been paying and growing dividends for decades. These aren't speculative plays or meme stocks. They're the foundation of the American economy. And here's the beautiful irony. By focusing less on the stock price and more on the dividends, I've become a better investor overall. I'm not panicking when the market dips. I'm not FOMOing into the latest trend. I'm just collecting my quarterly payments and reinvesting them for compound growth. Let me break down what compound growth actually looks like with real numbers. That $9.10 I received in September. I reinvested it, buying more shares. Those shares then earned dividends in December, which bought more shares, which earned more dividends in March. It's like a snowball rolling down a hill, starts small, but picks up mass and momentum as it goes. Here's what blew my mind. If SCHD continues to grow their dividend at their historical rate of about 6 to 7% annually, that $350 I'm receiving this year could become $400 next year, then $430 the year after that. And that's without me adding a single dollar to my position. But of course, I am adding more. Every month I'm buying more shares, which means more dividends, which means more reinvestment opportunities. The math gets pretty crazy when you extend it out over decades. Look, I'm not trying to sell you on SCHD specifically. Every situation is different, and you should do your own research. But I am trying to sell you on a mindset shift that completely changed my relationship with money. Instead of trying to time the market or pick the next big winner, I started focusing on owning pieces of profitable businesses that pay me regularly. Instead of checking my portfolio 5 times a day, I started thinking about where I want to be in 5, 10, 20 years. The old me would have been devastated by that $90 paper loss. The new me sees it as a buying opportunity. The old me would have panic sold during the market volatility we've seen this year. The new me just kept collecting dividends and reinvesting them. This journey taught me something important about building wealth. It's not about making the perfect investment or timing the market perfectly. It's about finding a strategy you can stick with through all the ups and downs and then actually sticking with it. SCHD gave me that strategy. It's not the only way to build wealth, but it's a way that works with my personality and my goals. I sleep better at night knowing that my money is working for me in high-quality, dividend-paying companies, regardless of what the market does day to day. That $350 in annual dividends might not seem like much, but it's growing every year, and more importantly, it's teaching me to think like an owner, not a speculator. When you own shares of Verizon and Chevron, you're not just hoping the stock price goes up, you're literally owning pieces of businesses that are working 24/7 to generate profits and return cash to shareholders. So where do I go from here? I'm going to keep doing what I've been doing, adding to my position regularly, reinvesting those dividends, and letting compound growth work its magic. In 10 years, I expect the $350 annual dividend to be much, much higher. And the best part? I don't have to be right about market timing or pick the next big winner. I just have to stay consistent and let profitable businesses do what they do best, make money. The guy who was staying up until 2 a.m. watching his portfolio, he's gone. In his place is someone who checks his dividends quarterly, smiles at the steady growth, and goes back to living his life. Because that's what good investing should do. It should work for you, not against you. That $90 paper loss? It's just noise. The growing stream of dividend income, that's the signal. And honestly, I've never been more excited about the boring, steady path to building wealth. Because I'm not just building a portfolio, I'm building freedom. Freedom to say no to extra shifts, freedom to spend time with people I love, freedom to sleep peacefully, knowing that even when I'm not working, my money is. That's what this is about. I want to hear from you. Do you hold SCHD? How much are you getting in dividends? Drop it all in the comments. Let's swap ideas, share wins, and yes, even share those red days. We're all figuring this out together, and if you're tired of the emotional roller coaster of trying to beat the market, maybe it's time to consider letting the market work for you instead. Not through some get-rich-quick scheme, but through the time-tested strategy of owning profitable businesses that pay you to hold them.